Okay, cool. Alrighty, guys. So again, welcome to the first meetup group for the OC Investor Tank. We're going to do a combination of in-person stuff as well as online stuff. So definitely for some of the real estate ones, I'd like to do in person. I think a lot of the people that go to the real estate meetups here in Orange County and LA, they're really used to doing the in-person stuff. It's also definitely cool to network with people. So I'd like to do more of that stuff. Definitely find some good venues for us to kind of meet up at. And yeah, just kind of talk about investing and networking and all that good stuff. So yeah, some of you guys in the crowd I definitely know, so I know where your experience level's at. But we've got a few different angles that we're going to look at, more advanced things, more beginner strategies as far as trading. But let's talk about some of the sectors that are going to be, good in the coming years. So commodities. Commodities are absolutely going to outperform the S&P 500. I've actually got a good video of this on my YouTube, and I'll pull up a really cool chart. But you can see basically we're in a commodities cycle that is, playing out right now. So this is adjusted for inflation. Commodities are dirt freaking cheap. And you can see this goes way, way back, all the way to like 1805. So everything's pretty cyclical in all the studying that I've done in the financial markets. Everything's got a cycle, right? Real estate's got a cycle, crypto, stocks, bonds, everything, has a low, high, and it's all very cyclical. So right now, commodities are definitely going to outperform the S&P for the next 10 years. A lot of people don't realize it, but inflation is actually going to run hotter than their returns. So they're going to be losing purchasing power, in regards to inflation. They'll be getting returns in the S&P, but it's not going to keep up with inflation. That's why commodities for the next roughly decade is the place to be for very, very safe blended portfolio. And there's definitely, ETFs. I think GSG is one that you can get in to where you're getting exposure to everything from steel to copper to coffee to orange juice, all kinds of stuff. Okay. Lithium. So lithium has already gone up a ton. Of course, that's in batteries for cell phones, electric vehicles, all this different stuff. Now that we're coming up on an energy shortage, uranium is now getting more favorable. So nuclear power has been out of favor for a long time. And now it's coming back around. There's a lot of different nuclear power plants that are already in the pipeline for construction. And that's, you can already see that happening in the price action. So I've done a lot of research on nuclear power, and it's pretty interesting just because it's been hated for so long and now it's kind of coming back around. But basically all over the world is, going to be jumping on nuclear power. Japan, the United States, we're having blackouts all over the place. So we're going to come, a lot of those places are going to come online. Gold and silver miners, this is one I'm keeping a close eye on. So like the GDX, the GDXJ, they've been downtrending for quite a bit. And that's a good cheap asset right now that's got long-term upside. Of course, cryptocurrency, very cyclical. You got to make sure you're not on the wrong side of this because you will get smoked. But we'll save crypto for a whole nother kind of meetup. Got a lot to say about that and why it actually has utility, use, value, etc. Right? Most people think that it's just digital, it's worth nothing. And there's an argument for that, but there's also an argument for the other side. So robotics, autonomous vehicles, EVs, talked about the EVs, but robotics is going to be huge. So, there's going to be so many things that are going to get automated. It's already been happening for a long time. And the labor shortage is definitely going to accelerate that. Cybersecurity, that's a huge industry. There is definitely not enough people going into that industry to service it. And now that we're, very digitalized, especially nowadays after COVID, that is becoming a big sector. And even psychedelic mushrooms, there's mushroom stocks. So I found out about this one from Kevin O'Leary, the Shark Tank guy. Which is pretty interesting. So they're using that for all kinds of different mental treatments. So basically what I'm trying to tell you guys here is, even though it seems like there's a lot of fear in the market, there's always a bull market somewhere. Okay, so bull market meaning it's going to go up. The asset prices is going to go, in a favorable price direction. A few different things when it comes to trading. So dollar cost averaging, you hear a lot of people say DCA. That stands for dollar cost averaging. That's basically saying that you are not just, if you're looking at something, you're not putting in just one order and buying it right then. You can do that, but you're never going to catch the exact bottom. And same thing with selling, you're never going to catch the exact top. So you want to layer in and you want to layer out. Okay, so that's what dollar cost averaging is. And then of course, not getting overextended on the funds that you put in. A lot of people say, don't put anything in, or, basically put in what you're willing to lose. Well, you're never willing to lose it, of course, but I would say just put in what you don't need immediately or need for the next, few years. So, and then of course, we look at where is the chart trading, right? Don't buy into big juicy pumps, buy dumps, buy red candles, buy when it's down, okay? One thing that is pretty interesting that happens just, as human beings is, we'll see favorable news and we're like, oh man, this looks great. Like no one's seeing this. I'm the first one to read it, at 6 a.m. this morning, this company's up, I'm going to buy it. Okay. It's pretty interesting. I heard this recently, but, show me the charts and I'll tell you the news. And I've actually got a really good chart, our first one that I want to pull up on this. And it's actually Twitter. So you guys know that Elon was reported to buy Twitter back here. It was right here on this date, April 4th, okay? So let me get rid of some of this stuff, kind of clean it up. So you can see right here on April 4th, it just made a huge, massive run, right? So, it went up 35%, in a couple days, like just crazy. So, and then of course, downtrended. I'm sure a lot of people bought this, right? And then it came down and then it of course dropped down after that. But it's so funny, right? Show me the chart and I'll tell you what the news is. Based on, my indicators, when this RSI, this relative strength is going up like this, you're looking to get in, okay? So we'll cover that in a little bit, but it's just a good example of that motto, that saying. Okay, cool. So we're going to start with some more kind of beginner topics. We're going to go over some of the timelines that you want to be looking at. So timelines meaning the daily, the weekly, the 4-hour. We were just looking at the 4-hour there with Twitter. Basically, that means how big is each candle, right? Is each candle a day? Is each candle a minute? What are we looking at? So for larger time frames, I'm pretty consistently looking at the daily time frame, and that gives you a lot bigger trends, right? So I can see all the way back from 2020 to where we're at now, and you can just get a lot better picture of what it's doing. So right here, some people would call this like a double bottom. So that's a favorable action right there. If it is hitting that bottom twice, it's likely to move up. Okay, so that's just kind of like the first thing that we're looking at when we see it. You can also go to a weekly chart, and also just to let you guys know, this is on tradingview.com. This is a totally free website. Definitely feel free to use it to its fullest extent. There's a lot of different features on here that you get for free. You could just spend, hours on this thing like I do. Spend a lot of time with this thing, really learning it, and it's really powerful. So I've got a whole setup video that I think I sent out this past week on how I set up my charts. So it will kind of walk you guys through. One thing that definitely helps kind of right off the bat is the candles. So you'll notice I've got different candles on. These are more traditional candles. I turn on Heikin-Ashi candles, which as soon as a downtrend is started or an uptrend, it stays that color, right? It stays red or it stays green. So as soon as you kind of see these green or red candles, you kind of know a little bit more about what the trend is doing. So that's one thing that kind of helps. Okay, so let's go back here. So yeah, time frames. So longer time frames. So for most people, you want to be looking at the weekly and the daily. Okay. Those are the two time frames you want to be looking at. Because for most people, they're long-term investors. They want to, put their money in a good place where it's going to grow and let it ride, right? And that's the easiest way. The easiest way is to build a portfolio of, good assets or even good ETFs. I think good ETFs are, very good for most people. So that way you're not having to manage individual stocks and it's becoming a headache to invest and a burden, and buy dips, right? And so, most people in their 401k, it's going in each week and it's just chugging along, going each week. But if you're just watching the chart every now and then, you can just buy in on dips, right? And buy in more favorable positions, like kind of where I'm, stopping this thing. So that's a strategy for most people. If you got a 401k, long-term portfolio, whatever it is, even if you view it as like a savings account, right? Like, hey, I don't need this money for a long time. I'm just gonna let it sit as like a savings account. That's the easiest thing for most people, right? Let it ride, don't sell, buy the dips, and just, sell eventually, right? I mean, now that we're kind of coming on to the end of a financial cycle, we're going to eventually get to a good bottom. And that's coming in probably the next, I'd say 6 months. We're going to get into a really good buying opportunity to kind of get in at the bottom and, let it ride for a long time. Of course, shorter time frames, that's going to be for shorter term trading, or I like to use them for entry points as well. So one time frame I like to use is like the hourly chart. So again, this is showing each candle is now an hour, right? So that's basically what it's doing. And you can see here, look at that move on Twitter. Within an hour, I probably moved, 25%. So even after it kept running. So, and then you can, again, adjust here, 30 minutes, whatever you want, even down to 1 minute. Day traders are more concerned with what's the price action doing, each minute, because they're in and out of positions pretty quick. So, so that's just a quick little synopsis there on timelines. Again, daily and the weekly is what you want to be looking at. I look at the daily the majority of the time. I'd say probably 75% of the time. And then, of course, shorter time frames for other entries and more fine-tuned stuff. So, you guys got any questions on that first topic there? If not, we'll go ahead and move on to the second one. Okay. So second topic is going to be the 200-day moving average and the 50-day moving average. Okay. So the moving averages are this indicator right here. It's this daily lines. Again, that's on my YouTube. Teach you how to set it all up. The moving averages is basically where the price has been over the last 200 days, 50 days, and 20 days. Okay. So the red is 20, the green is 50, the blue is 200. If you are under the 200, typically for ETFs, big blended portfolios, right? You're actually considered bearish. So another indicator to kind of layer into our tool belt is a long-term investor, again, for kind of fitting the average investor, is you want to be looking at the 200-day moving average. If you're invested in, again, big ETFs like the S&P 500, the NASDAQ, which is QQQ, which we're looking at now, which is tech stocks, you want to be looking at that, okay? So a lot of people who only want to trade a couple times a year, right? They look at this indicator and they look at it for entries and they look at it for exits. And as soon as it, breaks down under that 200-day, they're out, right? And as soon as it breaks above that 200-day, they're in. And you can see right here, it was bouncing. It respects that line quite a bit. So even right here, it actually, it saved you a little bit, right? So you got out here, you bought in at a lower price, and you shaved off a little bit of the losses. And it could have turned in pretty bad. And of course, you can get more aggressive where you could sell, and then as it heads lower, even buy it up, right? But it's a good indicator to know the 200-day. It doesn't apply too much to growth stocks because they're going to bounce up and down through that thing all the time. But again, the big ETFs, the S&P 500, the NASDAQ, the Dow, stuff like that. And it's also good just to get a feel on where the overall market is at. So, I mean, I'm constantly looking at the ETFs, mainly because I trade them too. I also trade kind of like the 3X leverage ones. So that way I kind of get, quick gains quickly in a short period of time. So that means if the S&P only moves 1% in a day, that 3X leverage one actually moves 3% that day. So that's why I like playing those. It's a little bit more predictable when you're trading the indices. It's a little bit easier to figure out and kind of see where it's going. So, but the 200-day moving average is a really, really key thing to look at. So you can see here, it broke it, and we've been downtrending ever since, okay? And now we're kind of resisting it. So we kind of hit it, rejected a little bit for a day, and then we had a big green day today, and it's really trying hard to get above it, right? And of course, it's trying hard and it's struggling because that's a big psychological level for a lot of investors. So I think we're probably going to break above it a little bit. We're going to kind of dance around, and then we're going to probably fall off again. So that's probably what's going to happen. So let's get our chart cleaned up a little bit here. So anyway, that's the 200-day moving average. You can see back here on Twitter, again, it's just bouncing through it a bunch of times, right? So it's not quite respecting it like it would with the major indices. So the rules don't quite apply the same way, but it does in a way. So it's not fully, just trash canned. It's just, you can see here, it bounced around, stayed flat, and then kept on. So here, actually, you would have done pretty well. Got out, get back in here at a lower price, served you right. So you just got to be careful, right? Because with single stocks, especially tech stocks, they're volatile. They bounce around a lot. So okay, so we'll move on to the 50-day. So for shorter term trends, so the 200-day, obviously, it takes 200 days to make that average. So it's a big, long, sweeping line. The 50-day is a little bit more attuned to short-term prices. So for short-term entries, so we, kind of were looping around, kind of rolling around here. The 50-day is a good entry point for short-term stuff, okay? So as it crosses and you do a candle close, so this would have been basically your candle close above the 50-day right here, then it'll likely want to continue on. So, and you can look at that for swing trading, right? So swing trading is we're getting in, we're riding it a little bit, and we're booking a profit. Okay, that's typically how I do my trading. I'm not yet a long-term buy and holder. Once we have this washout, I will be, but at different cycles in the market, you want to do different strategies. That's how I like to do it, because I want to maximize my profits and take advantage of going long and also going short. So I want to profit both ways, and that's what I like to do. So, but anyway, so the 50-day is a good short-term, entry to look at, right? So even just with these few indicators on this chart, just these moving averages and the candles, the way we have them set up, already tells you a lot. So, so those are some good 2 things to do right off the bat. That's going to help you a ton, right? And most people never look at these things. Most people have no idea how to read a chart, what it is. Like, they'll pull it up on Yahoo Finance and it just shows a little line, right? It doesn't show, nearly the amount of stuff and indicators that we're looking at. And this is just scratching the surface. Okay, so trend lines. Do you use VWAP? VWAP is traditionally used by day traders a lot more. So every now and then, if I do day trade here and there, not very often. But yeah, I really don't use VWAP consistently at all. Some people love it, and there's also longer term VWAPs, to where you could put on, a VWAP that would almost look like one of these moving averages. But yeah, I don't really use it that much. It's a good indicator that's well liked, so I just haven't spent a lot of time with it. Okay, so next thing, trend lines, channels, and demand zones. Okay, so trend lines are kind of what we've got drawn here, right? So you can see here, this straight line, each time it kind of wanted to bounce on that trend line. And then now the reverse, same thing. As we start going up and starting moving up, it's 1, 2, 3 taps and then bounce on that thing, right? And what's interesting is actually, you know, kind of going reverse. So this wedge pattern right here. So that's another pattern that we're looking at. But this wedge, we'll turn off some of these lines, kind of take some of the noise out of it. Okay, but you can see here, as we like hit here, hit at the bottom, this little wedge pattern, these trend lines, you can see as it broke it, then it used it as support, right? So that's what always happens. Each time it breaks it, or hits its head and then breaks it, it's resistance. It was resistance here, and then now it turns support, okay? So this turns support here, and then now this trend line is going to be support as well. So I guarantee it could come down and eventually want to bounce on here, or it could keep running up. But, you know, those are trend lines. You know, as it goes on, you can also draw trend lines kind of, you know, again, with bottoms, tops. So you can see here, you can kind of see a trend. It's really, you know, you're finding those demand zones where traders or the market is struggling to push past, right? So that's basically what you're finding with trend lines. And also, you know, channels. You're looking for uptrends, downtrends. So just like there's a downtrend here, there was also a uptrend from this point. And you can even go way back. And that's probably not exactly right. Probably got to redraw that more to like here. So yeah, you can get a pretty good trend line that's pretty close. It needs a little bit of adjusting. I had a trend when we were on this, you know, this path right here. I simply deleted it because I don't need it. I don't want it on my chart, you know, mudding it up, but it helps you kind of find where things trade a little bit. And so there's another saying that the trend is your friend until the end, until it's not. Okay, so I believe we were talking with Mike there in the beginning. So, you know, everyone gets recency bias, right? That's kind of how markets work. They think like, oh, it's you know, we're in an uptrend, it's going up, and then all of a sudden it's not. So, and you got to know when those things are happening, and that's where the 200-day moving average will come and help you out and show you that you've got trouble ahead. So that's a quick thing on trend lines. You know, you can so many different points, right? And so a lot of times they all move in parallel. So I could take this trend line, copy it, and I need to unlock it, but I can bring it up here, and that's a downward channel right there. So that'll help you kind of, you know, see what's going on a little bit. Didn't really respect that price action, but what it more so respected was kind of a falling wedge right here. So that's another pattern you can kind of look up on Google. We won't go too much into patterns because there's a million, but definitely trend lines is something that you want to learn to do kind of demand zones and just find out, you know, where things should bounce, where things are holding, where they're trending to. Okay, we went over channels. We'll talk about demand zones a little bit. So I think I got a good one here on Bitcoin. So this would be a good demand zone right here. So you can see I've got this box as, you know, a resistance level. So I expect Bitcoin to probably come up to about in this region, and then it's going to hit resistance, right? And why is it going to hit resistance? It's going to hit resistance because of this price action right here, because it was bouncing, holding, and then it flushed down, and it's going to hit that same resistance. It's never 100%, right? Nothing in trading is 100%. It's all about probabilities. You're putting the favor on your side is what you're doing with trading, okay? You're using different indicators, different strategies, and also you got to find out what works best for you and what your strategy is. But that's always what we're trying to do is just put the probabilities on our side, get a good risk versus reward, right? So let's say if Bitcoin comes in, you know, to this area, is it a good time to go long? You know, is it a good time to, you know, buy in and hopefully it goes up? You know, probably not. you know. A good time to buy in was actually, you know, at this low. And the reason being is because this trend line that I've drawn was actually the 2018, 2017 high. So that acted as a floor. And you can see, look at this. I mean, years across, right? Years, it respected that price action and wanted to hold. So, which is pretty cool. And then even back here on the bull run, it hit turbulence here, resistance, boom, blasted through. Now it's support again. Okay. So, um, so that's kind of demand zones. You're taking trend lines and you're kind of expanding it. So because you can see it actually did break the trend line slightly, but of course it popped back over. So just because it breaks it doesn't mean it's going to head lower, right? Doesn't mean it's going to flush down. You know, things like to trade in ranges. They like to trade in demand zones. So that's another thing to look for. There's also an indicator. It's pretty cool. Supply and demand. It's just automatic. So if you are, you know, don't know where to look, it'll automatically add it. It looks a little bit messy, but it kind of helps you to kind of see where things are at. So. Okay, one pattern I do want to talk about is expansion and contraction. Okay, so a lot of times things will get range bound, they'll trade really tightly, and then all of a sudden they'll blast off. And one chart that I've got that shows that really good. So this is actually the bond market. So this is the 10-year yield. So this is what mortgage rates are priced off of. You know, whenever you're buying a house, your mortgage rate is determined by the bond market. So, but as you can see, it came down here, big drop, and then now it's coiling up, you know, expansion leading to contraction, and then that contraction leaded to a big move, leaded to expansion, right? So whenever you see things coiling like this, when they're getting tighter and tighter, it's getting ready for a big move, either up or down, okay? And there's definitely probabilities of where things, you know, will want to go based on the way that this wedge is angled. So definitely want to be aware of that as well. And that's, again, a whole nother thing for patterns. There's a bunch of them to look into, but you can just know that as you're seeing this coiling, you can expect a big move after, and that's exactly what we got. So that's another thing, you know, quick little beginner thing. If you have your TradingView account set up that you can identify and determine and look into. Okay, so that pretty much covers it for some of the beginner stuff. And so again, I could talk about this for hours. There's so many different things, but not to get in too deep on that stuff. But I do want to cover some advanced topics as well, and talk about some of the indicators that I constantly trade with, which is Market Cipher and RSI. So RSI is very, very commonly used by a lot of different traders, or even just, you know, anyone looking at charts for that instance, right? We don't have to be traders, we can be long-term investors. So here's a nice clean chart of Bitcoin that we're looking at, and we're going to pull up the indicators, okay? So RSI stands for Relative Strength Index. And whenever that is at a bottom, you have a good risk reward to the upside, okay? So right here, back in May last year, the RSI bottomed out when Bitcoin was flushing down, right? This is on the daily time frame, okay? You don't want to be looking at like the minute time frame because it's too short term and it's not what you want to see. But you can see the relative strength all the way from here was losing momentum and constantly falling, right? And what was price doing? Price was kind of starting to roll over. So even right here, back in March, it was starting to tell you, hey, I'm losing steam, I'm losing momentum on this move. And then eventually it flushed down to the bottom, and then it put in a higher high from this point to this point on the indicator. And that's what you want to see. You want to see a turn, okay? So this is called a divergence. This is called a divergence. So whenever you're seeing price action and the RSI do the opposite, that's a good indicator that it's going to flip the other way. Okay. So that divergence, meaning they're going against each other, is showing you that there's a trend change coming. Okay. So this is a really, really good indicator for, everyday use. And again, these are basically the only two things I use along with the moving averages. That's pretty much all I need for identifying, when I want to buy, when I want to sell. So market cipher is a whole kind of beast. I'll try to boil it down here in a minute. But this is, there's a lot of tutorials on YouTube about this one. And really, yeah, I will be using that indicator for a long time. So anyway, so again, you can see here, right? So as it's doing the opposite, those are divergences, and you want to be thinking the opposite way. Everyone was super freaked out right here, right? Everyone was like, they thought it was going to crash on this drop. And then, of course, it didn't. And then it rallied over 100%, basically. So you double your money just on this move right here. And kind of into that, one thing I do want to bring up is the fear and greed indicator. So kind of going off the schedule here, but so I'm sure you guys have heard about this, the fear and greed index, but you can go on CNN Business and look at it. Whenever there's crazy fear in the market, you want to be thinking the other way, right? It's because everyone's freaked out, and it often goes the other way. It goes against them. So, and then same thing, when it's extreme greed, you want to be thinking the other way of like, ooh, I should maybe be layering out of this a little bit, right? So it's never 100%, but it is more right than wrong. That's for sure. So right now we're at a neutral reading since the market's been going up. A lot of people are kind of like, okay, they're not as scared anymore, but they're still a little spooked. And so I think we definitely have more upside in the markets for sure. So, but back to Bitcoin right here, people were really fearful of another big drop or big drop off or crash down to, basically its previous price action here. So that's another thing to look at when you are looking for entries and when you're looking for exits on different things. So, okay, so let's talk more about some of this stuff. So again, we want to look on the daily time frame, and you can go to the weekly as well, but the dailies, again, where you want to spend most of your time. When the RSI is out of these bands, so this is kind of the average, right? So when you're at the 70 reading and when you're at the 30 reading. So TradingView is nice enough to have these indicators all for free. They provide these bands that, tell you, hey, these are the ranges of which you want to be looking at. So you want to catch, buys on the bottom, sells on the top, or if you're shorting, you want to short at the top. So that's all the stuff you want to be looking for with RSI, right? And so, of course, it's a momentum indicator. It'll go kind of follow the chart pretty closely. You can see each, move down and each move up. It's kind of bouncing around with it. Now, market cipher, this indicator is definitely more complicated. And there's actually some cool alerts that you can set on this thing. So if I open this up, I actually do set some of these things, these alerts. So it'll alert my phone if anything puts in a buy signal. And you can do that with a paid subscription. So like this actually gold little gold circle, that's a buy indicator from Market Cipher. So it was telling you to get in, right? But the biggest thing to look at with Market Cipher is the waves. So these are all momentum waves. So this green wave, you can kind of see it in the background. It's more so noted with the bar at the bottom. So the green wave is in and it follows this bar here at the bottom. And then the red wave is in right here. You can see it. And then you have the red bar lit up now at the bottom. So kind of the same thing. When the waves are red, it's you're at a good risk reward to the upside now. Okay. The bottom is kind of rolling and moving around like this, and the momentum is shifting. Same thing to the upside. When it's in the green, then it's it's kind of getting a little frothy. It's the momentum is shifting, right? And so that's what a little one will do, and that's what it wants to tell you. So same thing right here, right before Bitcoin took another big dump back here on April 22nd. See, the green bar was put in, the green wave was put in, and then what happened? Boop, flushed on down, right? RSI was at the top. It's telling you, hey, I'm at the top of my momentum. I'm losing steam. You probably shouldn't buy me right here. You should think about selling if you're short-term trading. So that's what it was telling you. And then, of course, you can see, put in a nice red dot on that divergence wave, okay? So these are all just kind of momentum indicators, all these waves, all these green and red dots. And I go more in depth on this on my video because, again, I can make a whole 2 hours, session last with Market Cipher alone. But just knowing where these waves are at on the daily trends or the weekly trends is huge. It helps you immensely. So definitely feel free to use that and take a look into that. So, and then I guarantee you right here, once we finally hit a green wave again, Bitcoin's going to hit turbulence and it's going to want to turn the other way around. Okay, just because the market's really weak right now. And I could be wrong. It could go up. You never know. I think we're pretty close to a bottom. I don't think it's going to go too much lower. So for someone who's, a long-term investor of, say Bitcoin or even some stocks, I mean, some stocks are 85% down from their highs. So again, it's all risk reward, right? That's a really good risk reward ratio there. Okay, so the yield curve. So here's another market predictor of where we're at in financial cycles. So this is the yield curve, and I'm sure you guys have heard some stuff about it. Again, this is a more advanced topic, but the yield curve is basically the bond market, okay? So you'll hear a lot of investors, if you listen to some guys on YouTube, saying that the bond market tells all, or what the bond market is telling me, et cetera, et cetera. That's because the bond market is 4 times as big as the stock market. There's a lot of assets tied up in the debt market, which is bonds. So the yield curve is basically the 10-year and the 2-year treasury. And it's a ratio of those two assets. And when it comes below the negative level right here, so right here, I'm going to draw a trend line actually. So when it comes down below that negative level, right down below that gray line, you're in trouble. The bond market is telling you that your economy expects low growth, slower economic activity. That's what it's telling you, right? So I've marked these kind of peaks, or when it bottoms out and when it starts flipping, okay? When it goes negative, goes into negative territory, and where are we at again? We're in negative territory, okay? We're at negative 0.46. So what that means is this is the 2-year. So the 2-year bond is paying 3.2%, but the 10-year bond is paying 2.79% return, which doesn't make sense, right? If you're going to tie up your money for 10 years, you should get paid more than 2. But that's what happens during recessions. The bond market flips like that, and it's a key indicator that tells you that the economy is not looking so hot, okay? So what I've got here in orange is actually the S&P 500, and you can do this with this little compare button right here. You can compare different assets against the chart that you're looking at, and you can see each time the yield curve was telling you you're in trouble. Even back here, right before COVID, the yield curve, went negative, slightly negative, not too negative, and then we got our drop. And then now we're deeply negative, and that was kind of the peak of the market right here, was back in December. Okay, and you can go back and look at this stuff, and it lines up really good. So, but I'm just looking at the more recent stuff back to the 2000s. So, and you don't need to dive too deep on truly understanding the bond market or stuff like that, but just know that this is a really good predictor. I think it's like 88 or 85%, chance predictor of recession. So when you see the yield curve inversion like this, you know that you want to be peeling off some profits, waiting for things to fall. And that's the period that we're in right now. So we expect more downside. We should see more downside. We're definitely deeply negative. I mean, we're more negative than we were in 2007, 2008, right? That doesn't mean that it's going to be worse, but it's definitely a sign that you should have more downside. And until it starts kind of flipping like this, and normalizing a little bit, then you can start looking for some bottoms. So any questions so far? Want to kind of stop periodically if you guys got questions. Anything you guys are interested in? Yep. Okay, cool. We'll keep on moving. So anyway, so this is a really good thing. I mean, guys, if you soak in like 10% of what I'm saying today, you're going to be so much better than most people, or maybe than even you are right now, or friends, family, whatever, as far as investing, right? You're going to be able to talk the talk, and also help your portfolio along the way. Okay, cool. So we're going to go into something that's actually a lot of people consider boring, which is actually bonds. So bonds actually a really good risk reward trade right now, and we're going to take a look at why. So got to go back and compare. So the TLT is actually a bond ETF. And you can see I've marked all these kind of maroon lines on the back with big peaks and troughs. But basically, you take the 10-year treasury bond, and the way that this works is interest rates and bonds are a teeter-totter, okay? So as interest rates move down, that pushes bonds up. And then as interest rates go up, that pushes the bond price down. And you can see it perfectly here. I mean, so let's look at this trough right here, right? As the interest rate went down, what happened to bond prices? Started rocketing up. And then right here, as we kind of bottomed and then started heading up, bond prices started to fall. Then here's another top. Rates go down, bond prices go up. And you can just see it all the way through, right? So where are we at right now? We're at a big point where, and we'll take away the TLT. We're at a big point where we're kind of hitting another peak, right? And actually the bond market will continually go down, and it will keep going down. It doesn't move the other way. As our financial system kind of runs its course and gets to its quote end, this is how bonds react. They will keep sloping down. Interest rates will keep getting better and better over time. But of course, it's going to have these swings in between, okay? So right now we're at this big peak. Actually, we'll look at this pattern because it's pretty cool. So, and you can see it kind of just, it really wants to break it, but this is actually a head and shoulders pattern. So this is a left shoulder, the head, and then this is kind of the right shoulder kind of dribbling off. So this is a big topping pattern. If you look up, again, patterns and technical analysis, this is telling you that it wants to top out and head lower. So bonds, the TLT is a really good risk reward trade right now. And that's something that you could just sit on for a few years. So as the stock market goes down, interest rates will go down as well. That pushes bonds up. And that's why a lot of people will do stocks and bonds in their portfolio, because they move inverse of each other. Okay. So interest rates, obviously, if money is cheaper, it flows into assets, it flows into housing, it flows into stocks, crypto. Then if the interest rate gets tighter, money gets sucked out of the system because people aren't borrowing as much and things fall, right? So it's that big pump and dip. So you can see where the bond market is at. You can have a good prediction on where asset prices should go. Overall, spending in the economy, different things like that. And of course, even crypto prices too. So definitely something to look at within your trading arsenal and your investing arsenal. So, okay, now something for swing trading. So this is a kind of short-term indicator. Let's look at the cues. Okay, cool. So this is kind of a short-term indicator for swing trading. So a daily, okay. So you can actually look at this on even like a 2-hour chart. And basically what you're doing here is, this is the 9-day moving average, right? So we're looking at the 20, the 50, the 200 before. This is a lot shorter time zone. and it's meant for catching small trades. So as it breaks the 9-day, you get in, and then as it, if you're following it to the letter of the law, you get in when it breaks it, and then you get out when it breaks it to the downside, right? So you're making this spread, you're making this 4%, okay? If you've got some of your indicators turned on, then you can better that because it's going to want to roll over and come down, and you can get up to 6%, okay? So you can look for stuff like that. So swing trading, if you really boil it down, pretty simple, but you want to do a more advanced technique, you can turn on the 9-day moving average. So the name of this one is the 9 EMA. And you can look at this, right? So right here, the market made a huge pump. I think when was this? Back in March. Like everyone was calling for, new all-time highs, but it was really just a rally and a downtrend. But I mean, here, if you would have caught it, if you would have broke it, even if you would have got in like here, I mean, got out early, I mean, that's 7%, right? And you're in, you're out, you're clean, and you can look for the next, you're just missing all of this carnage, right? So, and sometimes it'll want to go past and it doesn't quite go through. That's why you need to wait for a candle close above it, right? So like this right here would be a candle close. That's a clear gap above the moving average. That's your buy signal. So yeah, so kind of running through some more advanced topics. That's kind of them in a nutshell right there. Again, I could spend all day talking about RSI, Market Cipher especially on some of those things. Definitely check out my YouTube to go find more in-depth stuff on it. And I should actually post a part 2 of that video because there's so much within that indicator, but it's a really, really strong indicator and not many people use it. So, but it's really, really cool. And it's, again, all free on TradingView. So yeah, any questions, guys? If we don't have any questions, we can take a look at some random assets that you guys are looking at or potentially looking at. We can do a quick analysis on them. So let's check, see if we got any questions. SoFi. All right, let's take a look. Yeah, SoFi I think is going to do well in the long term. So I would definitely keep an eye on that. I'm pretty sure I got that on my watch list. SoFi, yeah, let's take a look. So again, we're going to pull it up. We're going to go to the daily. We're going to get some of our moving averages on here. Okay, and so yeah, SoFi, IPO'd in 21, right? So it's definitely been downtrending ever since. So I mean, a good risk reward as far as buying was definitely, kind of right here in May, right? As we're down at like $5 all the way from like 27. I mean, that's big. That's a big, good risk reward, right? That's 80% down. And it could keep falling potentially, but I just, I wouldn't see it falling that much more. So one thing I'm looking at right here is on the market cipher, you can see if you drew like an arc, I mean, that momentum wave is really arcing, right? That rounded bottom, and that's what you're seeing in the price action. So rounded bottoms are definitely something that you want to look at. That's definitely a good sign of something bottoming. And you've crossed the 50-day moving average, which is really good. So you can see it had a big, the algorithms likely, kicked in and pumped it above the 50 because it knows that that's a point of resistance. Again, it was resisting here. Bam, we broke it finally here, right? The green line is 50-day. So yeah, so this is looking really good. I'd say this is a good risk reward trade right now. The RSI is getting a little bit toward the top, which is a bit of a bummer. And actually, you can see here, if you zoom in closely, the market cipher posted a very tiny green wave, and now it's turning back to red. I think it may kind of jumble around in here. So, this is a good time to dollar cost average. I wouldn't put maybe 100% of your money in, but I put maybe 70% and kind of see how the rest plays out. But yeah, this is definitely a good one right now. So Thor, I know you got something, man. I know you got something you want to take a look at. Or Quang, I'm sure Quang's got something. Got the chat here. Make sure I'm not missing anything. All right, we got someone typing up something here. Feelings on XRP. Well, I won't say, how I feel about it. I think there's absolutely a use case, but let's go ahead and pull up the chart. I mean, it's going to look really similar to a lot of the crypto charts right now. It's going to be way down, of course. Yeah, XRP. So yeah, same thing. You can actually see I've got a Fibonacci indicator pulled up on it. So just to kind of show you guys what you do on Fibonacci is you take the most recent big low, which was back in March of 20 after COVID, you pull it all the way to the top, and you can see right here it respected the Fibonacci level. Right here, it was trying to fight above it and it kind of downtrended. Here it flushed below, but this helps you find bottoms is what it does. This Fibonacci level helps you find bottoms. So you can see actually we're at the lowest on the Fibonacci, which is really, I mean, again, that's a good risk reward sign right there. But kind of the same thing, kind of looks, similar to SoFi. A lot of the assets in the financial markets look the same right now. So, and that's just because, it's all kind of one big living entity. A lot of, algorithms and, things move the markets, right? I mean, retail is actually pretty small in the grand scheme of things. I think, it's like what 85% of assets are owned by institutions. So, that's where the money moves based on how they trade. So, yeah, so same thing. We're seeing this rounded bottom, but kind of same thing. RSI is getting a little close to the top. We just barely posted a little green wave here on the market cipher. It's a little baby thing. But it's kind of looking the same thing. So I would say, yeah, for sure. Right now is a good time to be throwing in. It's already, way down, like, geez, man. Yeah. Off this high. I mean, let's even just take it off of this one. I mean, off of that one, we're 78% down, right? Same thing. So it doesn't get much more than that. I mean, just to put it in perspective, some people may see this and be like, oh man, it's like, why would you want to buy that? Well, Amazon crashed 95% in 2000 after the dot-com bubble, right? And look at Amazon now. I mean, it's way up there. So I mean, again, it's all about risk reward. Some of these could go to zero, but if you're buying something that you've done some research on, you believe in, it's likely that it's a good time to get in. So Matic, same thing. It's made recently a pretty good run to the upside. I mean, it really kind of bottomed out here down at like the 36 and then made a really big run. So you can see here, again, we're definitely in the green on Market Cipher. As far as this divergent line, which is this blue line, it's kind of getting tight and coiling up to the bottom, which is telling me that it wants to maybe break above. And then you can see here, it's kind of holding the 9-day moving average. It's really kind of snaking along it like it wants to pop up. So that's what I see. I think I definitely see, more upside in Matic for sure. So yeah, if you were buying the bottom here at like, 39 cents, I mean, you're already up, let's say you didn't even bottom ticket. Let's say you got in right there, you're already up like 100%. So, but yeah, no, this is definitely a good one. Shopify, yeah, so we'll do Shopify and Sega, and then we'll put a wrap on that. So, and again, guys, a lot of the charts all look the same. Everything is, kind of oversold territory, rounded bottom. So here's Shopify, kind of the same thing. It's been doodling around in this demand zone, right? This is a pretty freaking clear demand zone that we got going on here. So that's your demand zone, right? So if it breaks out of here, I mean, if it breaks, past like right here, I mean, that's a good time to, it's going to likely have more upside after that. If you're trading, you want to look for a little break of this and then get in, right? And then you want to ride it for a little bit and then maybe cut some profits. That'd be a trading strategy. If you're looking for, buy and hold stuff, this is how you're identifying it, right? You should have the same analysis as a swing trader. It's just going to make you better. So it just helps you identify these areas and things to look at. So Sega. So yeah, playing with the monkeypox stock. So this is actually one that I looked into a while back, and this was before monkeypox really became a thing. But I saw some news, about it way back when, and I could just see kind of a pattern emerging that they kept talking about it, and it was, the big players, right? Like Bill Gates and the World Economic Forum, and these people, they know a thing or two, right? So they started talking about smallpox, and actually, so I started looking into it, and I think there was a few cases of it in the world at the time. It was very, very small, but of course, news broke about I think it was the World Health Organization making it an emergency or whatever. So but right after that, then it just broke out and just went crazy. So you can see, I mean, this, $6, $7 stock just kept rocketing. I think I got in at like 11. I mean, I've recently sold just because I'm already up like 100%. It could keep going up, but it's like, I mean, it is just really, really moving here. So, but even right here, right? So these two indicators right here, Market Cipher had a red wave here, and then it kept moving up. So even though your RSI was kind of peaked out at the top, again, Market Cipher is, definitely telling you, and of course it posted a green dot, which means that momentum shift is swinging to the upside. So yeah, I would definitely be careful with, a stock that looks like this, right? So, what I was talking about before is you don't want to buy pumps, right? I mean, it's already up, from this big pump, it's already up 200%. So there's definitely more risk potentially to the downside at this point. I mean, it could have a big red candle and sell off. A pullback would be a more favorable time to get in. If maybe it kind of pulls back to like this region right here. That's kind of, a spot where you have a little bit of a demand right there. And also you got some moving averages, right? So maybe if it pulled back to something right there, like 1530, then it'd be a good time to maybe look at getting in for another potential move up, right? And then of course, you're going to look at your indicators, you're going to look at what you got on your screen and weigh the probabilities and that risk reward for you. So yeah, so cool. So yeah, guys, so I could, again, we could go super in depth with a lot of this stuff. There's so many different things and, things to cover. I would highly suggest getting a TradingView account. Of course, it's, you can do the free one. I've got a paid one myself. But yeah, if you want to learn more about, how I do my setup here, definitely go check out my YouTube. It's just Tom Van Aken. Or Thomas Van Aken, I forget which one it is, but you can go look me up. Okay, and go check it out so you can get set up. So yeah, I definitely appreciate you guys jumping on for the inaugural OC Investor Tank. And next month is going to be on real estate. So I've got a couple projects that I'm doing with real estate right now, specifically accessory dwelling units. And I've got some good info to cover with that. I'm also a real estate agent as well, just so you guys know. So I do engineering by day, trading in my free time, and then also real estate in my free time as well. So a lot of irons in the fire, but I like it. It keeps me busy. But yeah, so appreciate you guys jumping on for the first one. I recorded this. I'm going to post it to my YouTube as well if you guys want to go back and check it out. And like I said, real estate is next month. We're going to try and make some of the first few meetups in person so we can kind of meet, network, and really kick the group off. So Well, cool. Well, thanks, guys. Appreciate you guys spending your time with me on a Wednesday and the OC Investor Tank.
Thank you, Tommy.
Yeah, no problem, Shin. All righty, cool. Well, thanks, guys. We'll see ya.
See ya.